Joining me right now is Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long this morning, Fox Business's Dagan McDowell and pollster and the president of Meslansky & Partners, Lee Carter. Great to see everybody this morning. Thank you so much for being here. Ken, let me kick it off with you. What's driving this market with this 400-point rally, you think?
I think it was last week, the recognition. It was an oversold. I mean, think about it. It was like the perfect storm with George Clooney in the movie, remember? I mean, it got hit from every side. The pandemic, number one, first and foremost, and shutting down countries like Germany and France. And, you know, look, I think consumers are going to pull back a bit here as well. Not getting a stimulus bill, of course, that's going to be kicked now to after the election to help support the pandemic. Then on top of that, we have the presidential election uncertainty. And then, by the way, the mega stocks, the mega tech stocks got hit hard last week. Apple, Amazon, sell the news because many of them had really strong quarters. They had top line growth, they had bottom line growth, and the market was just in a foul move and sold them all. So I do expect some type of rally. Again, would I buy this open here today? No, we'll probably fade a little bit. You know, this is kind of choppy, but certainly this sets up a really strong week, I believe, with some type of certainty from the election, let's hope, and what last week was the perfect storm for investors.
So do you need to know which policies will be in place before you really go deep into investing in stocks? I mean, we got the 33% GDP number last week, which was very strong. Does that continue regardless of who's in the White House? And what about policies dictating investing?
So policies, I think, for first and foremost, as far as the president, pretty much keep it the way it is, you know, by cutting taxes, lowering regulation, more and more companies coming to the U.S. I think that's what he's going to continue. That's very positive. Of course, we hear from the Biden camp about raising taxes. And by the way, this whole capital gains thing really just kind of messy, I think, because, look, you invest money, you already pay money, you already pay taxes on the money to receive it. Now you want to be taxed 40% for capital gains. That's not going to work very well for the markets. Now, the reason why I think the market could hold up is the Senate could hold on to, Republicans can hold on to the Senate and therefore block any major, kind of left-wing type of economic agenda. So that's what we'll be watching for tomorrow night as well. Not only the presidential election, but watching the Senate, and the Senate remains Republicans' hand. Let's say Biden wins, it's still checkmate. He's not going to be able to get some these big tax increases through.
Yeah, no, I think that capital gains tax that Biden is planning from 23.6% to 44.3% or 44.6% rather is really significant. I agree with you. What stocks are you watching ahead of the election? Which ones are you staying away from?
Okay, so it's interesting. We put different groups together of stocks, kind of in the Trump stocks and let's say Biden stocks. And guess what? As of last week, they didn't really show much of a difference. In the Trump stocks, by the way, were Lockheed Martin, Northrop Grumman, a lot of these defense contractors were down. Some of the plays, let's say, for Biden would be renewables, solar, and so forth. They were down also. So the market's not telling you. But I do think overall, even though the election's very important, the pandemic is still the number one thing. And I think those companies that benefit, that are aligned with that, such as Microsoft, to me is their go-to. Mr. Softy, as it's called, gave soft guidance. They always do that. But guess what? Their balance sheet looks great. They also have this kind of perfect stay-at-home economy with the Xbox, with the cloud. So again, I'd be looking at those companies, unfortunately, that still kind of have us in this semi-lockdown mode, and that really favors technology. So I'm still going to stay there. I'd stay far away from cruise, airlines, those areas, which is like quicksand, and the opportunity cost of missing out on what I believe technology would be the leadership coming out of this.
Yeah, the Federal Reserve is set to meet this Thursday. We know that the Fed has kept rates, near zero and is expecting to do so until 2024. The decision is anything going to be influenced by this presidential result as far as the Fed is concerned? So we've got monetary policy this week and politics. Lee Carter, let me get you to jump in here because yesterday a lot of the pollsters that I was talking with were focused on the Iowa poll, the Des Moines, Iowa poll showing that President Trump was up 7 points. How important was that poll to your research?
You know, I think that poll is a very interesting poll. I'm always intrigued by outlier polls. What I'm really focused on is the average trends. And what I'm seeing in the average trends is day by day, Trump is gaining momentum in the states that matter most. You know, even in the nationwide polls, he's closing the gap some. It's still far from there. But when you're looking at the states that matter most, you've got to look at Florida, Pennsylvania, Michigan, Wisconsin, North Carolina. Those polls every day, Trump has gained just a little bit, and he always outperforms the polls. And so that's really what I'm focused on, is that momentum shift that we've seen over the last 2 weeks.
And on Fed policy, Ken Mahoney, anything to focus on going into Thursday's meeting, real quick?
Well, I think the Fed's going to try to even do more they can. They look at the fiscal side of things. Congress can't get it together. They couldn't pass a stimulus package. So Fed may not only double up, they may quadruple up on their efforts to just kind of hold this economy together as we get through this pandemic.
All right, we will leave it there. Ken Mahoney, great to see you this morning. Thank you so much. Look at the 10-year, 0.86.